Hey, good morning, everybody. Happy Monday. It's November 25th, 2025. Great to be with all of you today. Time for Daily Bites. We're running a little bit late here, so I've not doing the music this morning. We'll do that on next week. Don't forget, Thursday is Thanksgiving Day, and there will be no Daily Bites. So our next time together will be next Monday, the first trading day of December, of the month of December. All right. All right. So let's see where we're at. Well, huge rally on Friday, though we did close at the we did sell off a little bit and not close right at the highs. We're trying to recover some of that this morning, some of those losses from the last hour and a half of the day of Friday's trading. We're trying to recover some of those, some of that lost ground. We're up about 38 handles right now. On the S&P 500, NASDAQ up about 218, the Dow Industrials up about 100 or so. Was up a little bit higher about 40 minutes ago. Here we are in a short trading week, right? So obviously markets are closed Thursday, Thanksgiving Day. No trading on that day. And then on Friday is a half day of trading. The markets will close at 1 o'clock Eastern time, 10 o'clock West Coast time. So only a half day of trading. So what does that mean? That means that, oftentimes, not every single time, but oftentimes we see volatility start to decline into the end of the weekend, meaning, or the end of into a holiday shortened week. And why is that? It's because option decay becomes a factor, right? So if you're a seller of options, are you happy or upset about fewer trading days? Well, you're happy, right? You're thrilled, because if you're selling premium, if you're selling calls, or if you're selling puts, the fewer days that the markets are open, the better it is for your trade to come to become a winner, right? So anybody who is short volatility or short equities or options or so forth, they love this week. 3.5 days of decay versus normally 2, right? So you've got a full trading day today, tomorrow, and Wednesday, nothing on Thursday, and then a half a day on Friday. So let's say you're selling calls or puts against your positions, or maybe just straight out positions that expire next week, next Friday, which is the 5th or the 12th or whatever. You're going to get those extra day and a half decay to work off the premium. So what we usually see happen is that volatility sellers know this. They understand this to be happening over the next couple of weeks. So what they will do is they'll jump in there and start selling volatility and decreasing the premiums. Because remember something, when volatility is elevated, it simply means that options are becoming more expensive. It also means that the ranges start to widen out, right? Instead of normally going like this, we see the S&P 500 and the NASDAQ going like this, up and down, right? Large, wide moves in the indices. So that's going to be interesting to see how this dynamic develops, because we did have a couple of down weeks in November, came down and hit that 100-day moving average last week. And if we bounce off of that, which it appears we might have bounced off of that on Friday, and follow through for another couple of days, it's going to be positive. Now, the price action is going to tell us something a little bit different than the volume, right? And why is that? Because volume is going to recede this week. We may have a couple of strong volume days early in the week, Monday and Tuesday. And of course, Wednesday, a lot of people are going to be heading out early, leaving trading desks. And then, of course, Friday with a half trading day. Even if the volume levels for the first couple of hours are strong, the overall number at the end of the day is going to be low, right? Because you're missing 3 hours of trading, right? So, so just something to think about here. Is there anything you can do about it right now with these conditions, with volatility right now? There's really nothing you can do about it. Just to observe and accept where the markets are going to be going. Pay attention to the action. Pay attention to the price action here. I'm telling you that if the S&P 500 can crawl back up above, say, 66.50 or 66.70 on a close, I think we make a run at the end of the year towards 7,000, right? And that would be another 5% up over the next 4 or 5 weeks. We're in a seasonally strong period. It hasn't been showing up yet, and maybe it'll show up late in this cycle. Don't forget the Santa Claus rally starts, I believe, on December 24th. That is a period of time where you get the last 5 trading days of the year, the first 2 of the new year, where generally speaking, the markets are up significantly, at least 1%, maybe 2%. We did add some SPY calls on Friday out to December on a signal that my good friend Larry McMillan had for volatility. The VIX is down, and you see right now it's down about 1 point right now, down about 4% right now, down to about 22 and change. So if we see that continue to decline, it's going to be bullish for markets, right? So we don't have a whole heck of a lot on the calendar this week. There's some data coming out. I think the PPI is coming out tomorrow. We'll also have some manufacturing data coming out, jobless claims on Wednesday. We'll also have some earnings coming out this week. Nothing huge, but there are some important names that are going to be coming out, including Dell, which comes out tomorrow after the close. Agilent comes out today, symbol A, which was the spinoff from Hewlett Packard several years ago. Burlington Stores, Zscaler, which is a name that I've been in a couple of times this year. Urban Outfitters, Alibaba will come out with their earnings tomorrow morning as well too. Analog Devices, Autodesk, Kohl's Stores, Abercrombie and Fitch, Dell. Again, the aforementioned Dell. Best Buy is one that I'm interested in tomorrow, and then on Wednesday, one lone big name is Deere. DE is going to be reporting their earnings on Wednesday morning, I believe. So, still some important names to consider. We're moving into a new phase of earnings right now. We will be downshifting in about a week or two into the last phase of earnings to the end of the year, and then we cycle all over again in January. So it's going to be an interesting week. It's the last trading week of November, and we've got to be a little bit more cautious and pay attention to what's happening in front of us right here. The price action has been fairly negative. It's been pretty erratic over the past 6.5 weeks. Even though October was a strong month, we've gotten off to a poor start in November. Can we rally back? Sure, absolutely. Volatility comes down, and we're going to see the futures starting to rally in kind. So that's going to be it, everyone. I want to wish everybody a very happy Thanksgiving. Have a great Thursday. Enjoy your day off, and if you're taking Friday off, enjoy that day off as well too. I appreciate all of you. I'm very thankful for all of you that you watch the videos with me every week here, and it really truly is my pleasure to bring these to you every week, a couple of times a week. Even when I'm on the road or when I'm at home, it doesn't matter. I really enjoy sharing some knowledge with all of you, and hopefully you guys are getting smarter, you're getting better at what you do. Appreciate all of you, and I'll see you guys all in the chat room if you're there, and we'll see you back on Monday. I guess it's what is it, the 1st or something like that next week. So appreciate all of you. Enjoy. Don't eat too much turkey. Watch some football, and I'll see you.